Through the first half of the year, shares of AMD really have not caught a bid and in fact have underperformed, being down nearly 5%. So can we outperform with AMD and this semiconductor name in the second half of the year? The last time we also took a look at shares of AMD was nearly 5 months ago when the stock was trading closer to $172 a share. I titled that video, "Is AMD stock headed to $150? In the after hours today, on the heels of reporting their Q2 results, shares are trading closer to $146 and some change. So we'll get into their Q2 results, both from a top line revenue figure, we'll get into the earnings, we'll get into all the important data center revenues and segments over at AMD. And in fact, the data center segment posting a record revenue figure in the most recent quarter. We'll get into the estimates and especially the guidance for the upcoming quarter over at AMD. We'll look at some news, the P&L, the cash flows, and as always, jump into the technicals. This one had been making a steady pattern of higher highs and higher lows, recently breaking through that. But once again, you are getting close to a decision day on AMD. Will you once again enter this uptrend and continue to move higher? We'll look to answer all those questions and a whole lot more in today's video. Hey guys, hope you're doing well out there. It's time to check in with shares of AMD, basically sitting right in the middle of their 52-week range, closer to $150, really $146 in the after hours, up nearly 5.8%, pairing those year-to-date losses. Look, over the past 1 year, you're still up 22%, which is not shabby when you especially look compared to the S&P 500. You certainly kept up with your benchmarks, but when you take a look at other names in this field like Broadcom, like Nvidia, then you've certainly underperformed. And that is for good reason, as this company's growth rates really weren't up to par with the other companies that I just mentioned. But we have some outperformance expectations with AMD as we head into the subsequent next few quarters. Now, for their Q2, revenue came in at $5.84 billion. That was good for 9% growth year over year, beat estimates by 120 million. So right there we see we don't have the breakneck revenue growth like we see with a name like Nvidia, for example. And so for that reason, we also don't have the same returns with shares of AMD like we've seen with a company like Nvidia, to be honest. Now, Q2 non-GAAP EPS came in at 69 cents. That beat by right around 1 cent, as estimates on Wall Street were right around 68 cents. That would have represented growth of roughly 17.5%. That's really in line with where AMD coming in with this quarter. Now, revenues did come in with a beat as expectations were near $5.7 billion. That would have represented around 6.5% growth, like we saw AMD coming in with nearly 9% growth on their top line. Now, what's more exciting is their different segments, and we'll get more into that in just a little bit. But what I first want to talk about is guidance for the upcoming Q3, or rather I should say the current Q3 we are in. So AMD guiding for revenues near $6.7 billion, plus or minus $300 million. That is in the current quarter we are in. The average estimate on Wall Street by roughly 36 analysts was around $6.61 billion. So on their midpoint, AMD coming in basically $100 million higher on that midpoint. And then if you assume they can push up past, call it $7 billion, yeah, that would be higher than the average estimate. In fact, much closer to the high end at nearly $7.1 billion. Still wouldn't be, I'd say, crazy growth, but you are once again accelerating your revenue growth over at AMD. As next quarter, you're expecting roughly 14%. And then for the Q4, you're expecting back up to 23%. And as you head into Q1 and so on into 2025, you're back into that 30% growth rate on that top line. So that is the upside. That is exciting for AMD, considering the fact that you have revenues once again accelerating in their growth rate as you move along. Similar story on your bottom line, as you're expecting nearly 34% growth on that bottom line for the upcoming Q3, 60% growth headed into Q4, and then nearly doubling your earnings in Q1 and Q2 and so on. And so the guidance really looking pretty good over at AMD. They certainly came in higher than the midpoint, and I think that is what's sending shares higher by nearly 5% in the after hours. You're also expecting some expansion on your gross margin. That is expected to be at 53.5%. We'll see in this most recent Q2, they came in at 53% on the nose. Now, operating expenses also expected to be right around $1.9 billion. They are still expected to ramp up on those operating expenses as your revenues continue to grow just a little bit. And then shares outstanding, expecting 1.64 billion. We'll see when we get on to their cash flows, this company once again resuming a buyback. And so that should bring down those shares outstanding, or at least control them from a dilution perspective. Now, what I also want to point out is for this year, you're paying right around a 40 times earnings multiple. That's for the end of 2024. So still pretty steep, I would say, for the growth rates you're getting on this one, at least as of now. But what your upside with AMD is you really accelerate those growth rates into 2025, and the earnings multiple really isn't looking too expensive at right around 26 times a 2025 multiple. So if AMD can just come in and meet these expectations of right around 57% earnings growth for the next year and then nearly 30% revenue growth for the next year, yeah, from an earnings multiple, even probably from a sales multiple, you're trading just at 7 times next year's earnings. Not very expensive, especially when you consider the other names in this field and the market dominance this company has. I think you can probably put it at a slightly higher than 25 times multiple for a long-term dominant semiconductor name. Yeah, I think this company still does actually have room for upside at the current time. As long as they can come in and post these growth rates both on the earnings and revenue side, I think the earnings multiple actually has room to expand over at AMD as we move into the next couple of quarters. Now, this news coming out last week as the AMD president is set to retire next month. Victor Peng, he came on to the AMD executive team through the acquisition of Xilinx, which AMD completed in 2022. And really under his leadership, AMD became the #1 industry provider in FPGAs and advanced computing solutions. And so he is set to retire on August 30th. In the meantime, you have AMD executive who oversees the AI group will sort of oversee his role and sort of step into that role, as you would say. So I think not a huge deal, especially since it's just a retirement and not something like a boot out. Now, AMD also overcorrected into earnings. That was according to Barclays, along with AMD announcing an investment into Taiwan. So Barclays really saying that coming into these earnings, shares of AMD trading lower. We see even over the last 6 months, you have shares nearly down 20%. And even over the last 1 month, you have shares down 11%, as really all semiconductor names have seen a little bit of a correction. And so Barclays, at least according to them, they have an $180 price target. Maintaining it to overweight did cut it from nearly $235, but still well above current levels where AMD is trading. And then on top of that, separately on Monday, AMD announcing an investment of nearly $160 million into a new R&D facility that will be based out of Taiwan. And so AMD and Taiwan probably having pretty good relationships, considering TSMC, which is the sole proprietor manufacturer of these AMD chips. Yeah, they'll probably continue to manufacture those AMD chips coming out of this Taiwanese facility. Now, as we move into their Q2 segment results, what I want to point out is there's some really bright spots over at AMD, and then there's some segments that are really lacking at the same time. So you have data center revenue. This is basically the bread and butter at this point for AMD, really shining bright as you have revenues coming in at $2.8 billion. Just year over year, that was up 115%. So there is your NVIDIA-like growth on those data center revenues. Last year, we were at nearly $1.3 billion. We more than doubled that, now at 2.8. Even just quarter over quarter, you're up nearly 21% on those net revenues. What's even better is you continue to maintain your operating margins in that segment. In fact, expand it as you have operating income at $750 million off of that $2.8 billion in revenue. And so your operating income exploding, nearly 4xing, up 400%. Even quarter over quarter, you're up 37% on the operating income side. So the data center, certainly those GPUs that AMD is shipping are continuing to move, and that is what they say. The AMD Instinct GPU shipments had strong growth. Also, the 4th gen AMD EPYC CPU sales showed robust sales on a year-over-year, even sequential basis. The other bright spot over at AMD's business is the client center, as you have net revenues up to $1.5 billion. That was up nearly 50% year-over-year, up nearly 9% just quarter over quarter. And even on that segment, you turned from an operating loss of right around $69 million last year to now an operating income of close to $90 million. So year over year, that is substantial growth. Keep in mind, still a very low margin business as you're churning out just $90 million off of close to $1.5 billion in top line sales. But keep in mind, that was due to sales driven by the AMD Ryzen processor. So they're still seeing pretty good demand on the client segment side, which is good to note. What they are still struggling in is the gaming segment. And this is what we've seen really out of any gaming peripherals or gaming companies, is that revenues down at nearly 60% year over year at just $650 million. Last year, we were nearly $1.6 billion in top line revenues for this gaming segment. In fact, year over year, sequentially, this is down 30%. So you're still seeing the gaming segment, even sequentially, remain in a pretty weak spot. We can't even say that this segment is coming back in the most recent quarter. And what I want to point out is last year at the same time, the gaming was actually the largest part of AMD's business. You see this $1.58 billion, that was actually the largest revenue segment compared to all of their other segments. Now what you have is the data center revenue coming at $2.8 billion, far exceeding really any of your other segments. So this company's revenue profile has really changed over the past 1 year. Instead of really being a gaming company, I would classify AMD as more of a data center company, similar to an NVIDIA, where you're selling those GPUs and CPUs into data centers rather than into high-end gaming computers or AI PCs. While you still have that AI PC demand, you really don't have any gaming demand, as that has fallen off a cliff and really is showing no signs of coming back. On top of that, the embedded segment remains in a tough spot. Revenue is down 41% in that business unit, operating income down nearly 54%, but you are seeing some flattening out, at least on a sequential basis. So that is a good sign for embedded revenues. But like I said, this company is now purely pretty much a data center story, and it will move based on how those GPUs and CPU sales into those data centers, like a Microsoft, come into place. In terms of P&L, in this most recent Q2, you had revenues coming at $5.8 billion. That was up 9% year over year. Gross profit coming in north of $3.1 billion. That was good for 16% growth year over year. So you had faster gross profit growth than your revenue growth. That tells me is they expanded their gross margins up 3 percentage points from 50% up to 53%. Really, over 2022 and 2023, we saw this company shrinking on those gross margins, those operating margins. They're now once again in that expansion mode due to higher mix from that data center revenue, which really has really high margins compared to especially gaming, which they've derived most of their revenue in the previous year from. We move down all the way to operating margins, again expanding 2 percentage points, coming up to 22%, and your net income up nearly 19% year over year, up 11% sequentially. And this company continuing to bolster on more earnings per share, some of that helped by a small buyback that they now have in place. In terms of the balance sheet, that looking all good, as you have cash and equivalents up 12%, down 12%. That's on a sequential basis. Looks like most of that went into the payment of their debt, as you have cash down, call it $600 million, and your debt down right around $600 million as well. The inventory line also staying relatively flat to up just slightly, up 7%, coming in at $5 billion on the nose. Maybe some of that is due to a build-up for their Q4, as they're still expecting a pretty solid ramp up in those Q4 revenues and sales, and so maybe some of that is due to just holding on to that Q4 that's coming up. Some of it might just be due to a different mix in the type of inventory they're holding. So maybe instead of holding on to more gaming CPUs and GPUs, they're holding on to some of those Instinct data center chips instead, as data center build out continues to be extremely strong from your mega cap tech. In terms of cash flows, you have nearly $265 million in net income. That's over the last 3 months. Over the last 6 months, you're looking right around $400 million in net income. We flow all the way down to operating cash flows, and this company is just generating right around $600 million in operating cash flows. That's over 3 months, and then roughly $1.1 billion in operating cash flows over the course of 6 months. Keep in mind, you still have a $225 billion market cap. So certainly from a cash flow perspective, you're paying a hefty premium. Even if you annualize this, you get close to, I'd say, give them credit for $2.5 billion in operating cash flows. And you're still paying a extremely hefty cash flow multiple on this company. Now, your upside is they'll continue to grow those cash flows at a pretty fast clip, considering revenue and earnings are expected to ramp up extremely fast, especially in 2025. On top of that, they don't have a ton of capex spend, as in the most recent quarter that came in at $154 million, up still year over year, but not up anything crazy, I would say, and it's not certainly exceeding their operating cash flows. And so they still have a fair amount of free cash flow that they generate in order to put back towards the repayment of debt. We see $750 million in debt payments in this quarter, and then on top of that, a $350 million buyback that they have started. Looks like that they held off over the last couple of quarters. They've once again resumed that over at AMD. So you still have some free cash flow being generated that's being used for debt and also buyback. So extremely shareholder friendly uses of that free cash flow. In terms of a technical perspective, you were on a basically textbook pattern higher from October of 2022. And really anytime it came in and touched this blue line, that was roughly, I'd say 4 or 5 times. It was a clear buying opportunity until this most recent time where it did touch it and in fact broke underneath it. What you are now seeing though in the after hours is once again coming back up to that blue trend line. So you certainly haven't closed above it. The post-market move isn't as strong to push up higher than this blue trend line and confirm that we are once again back into this trend. So we're still hovering right around the $146 per share. And so I would expect maybe AMD come up here, hit its head on this trend line. And then one thing you can expect is this one to continue to head lower and find some footing, at least on this green support line right around $133 a share. That's a level where this one has been rejected in the past in June of last year. It's also found support more recently in December and January of this past year. So that's one level where I think AMD shares could get reversed and head lower and maybe come down to $133 a share. Certainly if you do see a follow through tomorrow, maybe shares of AMD continue to rally, maybe you see a broader rally in the NASDAQ or in semiconductor names, this one comes up here, I say close to $155, $156 a share. What you then want to see is a back test to this trend line, once again at close to $150, and that is your point to jump into shares of AMD. So like we said last time, shares of AMD likely still headed to $150, and I'd say that really is your point to pounce on this one. Once it back tests this trend line and you confirm that the trend is certainly still intact, I think AMD has room to continue to head higher and eventually once again make a pattern of higher highs and higher lows heading back into this uptrend. You have some upper head resistance, probably close to $180 a share, but you are still a ways away from that. And so certainly if you want to pick up some shares of AMD at this $150 level, wouldn't blame anyone, but I would wait for a confirmation that the uptrend is still intact. And the way you do that is this one breaks out over this, retests back to the line, and then continues to move higher. So you want to pick it up on that retest. Maybe set a stop loss if you are really concerned. Your first level of stop loss would really be right around 138, if not lower, at $132 a share. From its fundamentals, I'm beginning to really like this company, considering the fact that the revenue mix is now moving more towards data center and moving basically fully away from gaming. This company also continues to have a dominant position in the AI PC market, and so I think they'll continue to maintain that. And that's one of the reasons why I think I'm bullish on AMD, because of that higher data center and client revenue mix moving forward. And certainly if they can come in with these growth rates for the end of this year, but especially into 2025, I think this company from a valuation perspective does have room to expand that multiple, and that could be one of the reasons continuing to power this stock higher. That was my take on shares of AMD. I also want to mention you can find this one in a ETF, and my recommendation for that would be the iShares Semiconductor ETF, ticker symbol SOX, as you have basically a 6.5%, nearly 7% weightage into AMD. The reason I wouldn't recommend SMH for someone more interested in AMD is because NVIDIA makes up nearly 20% of that ETF, but in the SOX ETF, it's a bit more balanced, where you have Broadcom, NVIDIA, and AMD sort of making up around 25%, relatively equal weighted in your top three holdings. So you get more exposure into AMD through this ETF, but without taking really the key man or the one stock risk that you would get by simply investing in shares on their own. Let me know your thoughts on this one in the comment section below. One I think that has room for upside as long as those growth rates don't slow down and the guidance that AMD has provided at nearly $6.7 billion really comes in line, if not slightly higher. Let me know your thoughts on this one in the comment section below. As always, thanks so much for listening, and I'll catch you guys in the next video.